Good morning and a warm welcome to everyone to this webinar. In this webinar, we'll be discussing on the HDFC Dividend Yield Fund, NFO, closing on 11th of December. To run us, through this NFO and what is there and why one should look at making the investment in this fund, we have Mr. Krishan Sharma, Deputy Vice President, Training Lead, HDFC AMC. So, good morning, sir, and a warm welcome to you.
Good morning, Saju, and thank you. Thank you for this opportunity.
You're welcome, sir.
And welcome, friends, on this morning hours, today's morning hour. We're going to talk a bit on markets and, of course, on the new fund offer of HDFC, that's HDFC Dividend Yield Fund. There are many misconceptions about dividend yield. That's definitely I'm going to talk with you. But before that, at the outset, let me submit to you the views expressed in this program are of the speaker and not necessarily of the HDFC Asset Management Company. As we all know that mutual fund investments are subject to market risk, and we need to read all documents, particularly offer documents, carefully before investing. With that disclaimer, friends, I hardly welcome you all. It's good to be on this webinar, particularly in marketing hours. So I believe that your time is precious. I'll not take much time, maybe perhaps at the half an hour at the length. And this is the first slide which I want to share with you. It's a very simple slide, doesn't give anything to you, but there's information. The information is that China, which is the most hated country today in the world. A week back, there was a survey from Europe which says that 73% of Europeans hate Chinese. And if that survey is being done in India, perhaps it will be 99%. But the survey says that 73% of Europeans hate China. And what's the reason? Reason is that whatever is happening in Europe today on the pandemic front, they believe that it's happened due to Chinese behavior, right? So what has troubled them? That they have imported the disease from China, and to tackle that disease, they've imported the PPE kits, the ventilators, the drugs, all those things, supportive things to combat with pandemic. That also they have to import China, right? And there are several other reasons. China has problem with Australia, China has problem with Japan, China has problem with Korea, China has problem with India, and most of the countries, and US with US, they're at loggerheads for last 3 years. But look at this, when it comes for money, these very Europeans have lended money to 4 billion euro. That's equal to $4.7 billion to Chinese at negative rate of interest. It is first time in the history of China that they have borrowed at negative rate of interest. Now, this is something very interesting, friends. They are lending to the country they hate the most. Why it is so? It is so because China is the only country in this pandemic which has recovered from the lows of economic growth rates. Now, it gives us a message. The message is, whenever you talk money, whenever you deal about money, do not think emotionally, think rationally. And that's the very purpose of showing this slide, right? Whenever you come to the markets to invest your money, you invest through markets, right? And we buy stocks, we buy bonds, we buy a plot of land, we buy gold, whatever transactions you deal in, you come to the markets. But believe me, friends, before you shell out of your money to buy any asset, you should know one thing: money itself is a commodity. First, treat your money as a commodity, then buy other commodities from this money. This money has a market. This money is bought and sold. This money has fluctuations due to demand for money and supply of money, right? This fluctuation is the transactional advantages due to this rise and fall in the price of money, and this gives a gap between the value of use and value of exchange. We need money to use, but at the same time we deal in money in exchanges as well, right? So what is the price of this money? The price of this money is interest rates. So if a person doesn't understand the interest rates, and interest rates you cannot understand without knowing inflation. An investor who doesn't understand these two words, inflation and interest rates, cannot understand money markets, and the person who does not understand money markets cannot find the right value of stock markets. So if you need to understand where the stock markets are, what the right valuation of stock markets are, what's the right valuation of the markets, what's the right valuation of a particular stock of a company, we need to understand the price of the money. With that brief introduction, friends, our aim to invest in these markets is generating alpha, right? If this is not our aim, we simply buy ETFs, we'll simply buy index funds, and we'll be able to meet our targets, our goals, our financial goals. But we have a craving for generating alpha. Why not attempt? Why not try to earn more than what the market offers, right? And the moment when you come to generate alpha, you search for higher total return. What is total return? Return is composed of appreciation and the payouts, cash flows. Cash flows can be in the form of interest rates, interest coupons in the case of bonds, and dividends in the case of equities, right? So you look for the total returns, and when you look for the total returns, then only you can identify what's actual alpha is. In this year of this century, 2020, what is the most suitable strategy? I'll take you through words of a person called Michael Higgins. He was a financial advisor in US. In 1991, he came with a strategy in US. Where US was in 1990s, I believe India is in 2020s. What was the state of the economy, investing economy in 1990s? It was becoming increasingly difficult in US to beat markets. It was becoming increasingly difficult in US markets to generate alpha, and people were switching to index funds and ETFs, particularly index funds. Michael Higgins told them, if you buy companies with growing profits and the companies which are paying dividends, and if the dividends are growing over the years, buy those companies when the dividend yield is high. And I repeat again, if you want to generate alpha, if you want to beat markets, buying growing companies are the companies where the profit grows, buy growing companies with growing dividends at the time when the dividend yield of the company is high. This is the most suitable, simple strategy. And the strategy in US is called dogs of the Dow strategy. The people, those who have followed the dogs of the Dow strategy in US for the last 30 years, empirical evidence says that in 80% cases, they have beaten Dow Jones as S&P 500. Now, this is one of the very big achievement as far as US is concerned, because most people believe there is next to impossible to beat markets there, right? You must have gone through that story sometime back where Warren Buffett challenged whoever will beat the Dow Jones or S&P for the next 10 years, he will go into a vigor of $10 million with them, right? So the philosophy of dividend yield strategies is a very simple philosophy. Chase the growth, and identify that growth through dividend yields. It's not the strategy which target highest dividend yield, friends. No, this is not the strategy which chases highest dividend yield. It's the strategy which chases growth identified through a value indicator tool called high dividend yield, right? Now, when you come to investing, what is the first challenge? The first challenge is how to find a good company. Why good company? Go for the better companies. No, we should go for the best companies, right? If you have a good company, if you have a portfolio of good companies, your portfolio will look like a stocks of 100 odd stocks in your portfolio. If you have a stock portfolio of better companies, perhaps your portfolio size will be 40 or 50 stocks. But if you have the portfolio of best companies in any stock market, your portfolio cannot go beyond 10 or 12 stocks, right? So what's the difference between a good company, better company, and the best companies? Good companies are the companies which generates good return on capital, right? So what are the better companies? Better companies are the companies which generates good return on capital at a very low cost of capital, right? Two NBFCs may have the same return on capital, but Bajaj Finance has a lower cost of capital. So whenever money markets will be in trouble, Bajaj Finance will be better placed compared to the other NBFCs. This is what the example I can give it to you, the difference between a good company and a better company. Which is the best company? Best company is a company which keeps on growing in size, which keeps growing its profits, which keeps growing its dividends, but doesn't need additional capital to grow. It doesn't need regular capital infusion. And this is how you identify best of the best companies. So how to ensure that you get the best company which has the lowest cost of capital and highest return on capital or growing return on capital? For that, you have to ensure that you buy the right business at the right time at the right price. And whenever you attempt this, you need indicators that helps you to identify the right value, right? And here you take the help of something called GDP to market capitalization ratios, P ratios, price to book value ratios, but there is a fourth ratio which is called dividend yield ratio. Dividends perhaps are one of the best strategy to find the right stock, right price, and right time. You know why? Very simple. Dividends don't lie, and cash cannot be manipulated. These are the two strong words which goes in the favor of dividend yields today. Look in the past in Indian markets as well. This red curve shows you the dividend yield, and the blue curve shows you the Nifty 50 index. If you look at whenever the dividend yields are higher, next few years Nifty 50 has generated above average returns. I repeat, whenever the dividend yields are higher, and if you have invested when dividend yields are high for next few years, you have generated returns which is higher than the average returns of Nifty 50 historically. Why this indicator is so good? Because unlike the price earning valuation, dividend yields cannot be manipulated. Friends, I will invite you to go back to the history and recall your memories on Satyam. What Satyam did? Satyam could manipulate its earning per share for years, months together, not only quarter or two, several quarters they could manage their earning per share. And when a company manages balance sheet and a company manages the earning per share, the resultant P valuation is of no use. But dividends are the hard cash which flows from the balance sheet, out of the balance sheet, in the hands of stakeholders. They don't lie. They cannot be manipulated, right? One of the most dependable indicator if you want to find best of the best companies. Dividend yield misconceptions. There are misconceptions and myths around it, surrounding the dividend yield strategy. Many investors believe that dividend paying companies lack growth. On the contrary, companies that have a track record of consistently growing dividend. The catchword is consistently growing dividends offer the strongest total return to investors. Yes, friends. Companies, you can go back to the history in any market in this world, the companies which has consistently grown their dividends have the strongest total returns for the investor. Any market, this holds true, friends. The simple reason that companies that are committed to pay dividends, why they give total returns higher? Reason number one, investment for growth is focused on the most profitable projects. Please understand this. I'll give an example and you will be able to understand this logic. There's a company in India, a very respected company, is there for around for the last 30, 40, 50 years in India. It generates it generates a lot of cash, perhaps beyond 10,000 crores a year, have a cash pile of 40, 50,000 crores, high return on capital company, high return on net worth company, but the share price is not moving. You know why? Why? Because the return, although the return on equity is high, it is not rising other companies. What's the reason? Reason is very simple. This company, if you look at the company history for the last 10, 12 years, what has happened with this company? Since they have a huge cash flows and they were not distributing high dividends, the board has huge cash. What you will do with that huge cash? Either you will diversify to other businesses which may not be able to generate high ROEs, or you will invest that money in the markets. If you invest that money in the markets and you put that money in bonds, bonds will generate 5% for you. Your company capital ROE is 40%. One side your business operation is earning 40%, but your retained earnings, your reserves, your retained earnings are earning only 5%. Your consolidated ROE will fall down and share price will not rise. And if you will go to other businesses, what will happen? The other businesses may not be high return generating businesses, your ROE will come down. And what that company has conveyed a message to you last year only, they have given a message going forward, they will increase the payout ratio of their dividend. A wonderful example to understand why paying dividend is so good, because paying dividend regulates the capital of the company, and board has tight hands, and due to that, they allocate capital wisely, right? For reaping higher productivity in profit. This helps to enhance shareholders' wealth in the long term. Right? The detail, if you want to understand which high dividend yield company you should go for, what you have to look at is the growth, the historical growth in net profits and the dividend payout ratio. If company has a low dividend payout ratio and a very high growth profits, these are the companies will have a rising ROEs, and the companies with the rising ROEs create lots of capital appreciation. This is the reason number one. And the reason number two is psychological boost. This we can understand from the experiences of US. I will give you a wonderful example to understand what dividend yield strategy is. Warren Buffett bought Coca-Cola in 1989. You know, when he has bought Coca-Cola, when the markets were like this. Can you see my cursor here? I don't know whether you can see or not. Look at this cursor, how high the dividend yield is. And if you buy it at a high dividend yield, in 1988, there was a Black Monday. You remember about that Black Monday. After the Black Monday, when the market was low, market had a very high dividend yield. At that point of time, Warren Buffett bought Coca-Cola. As per the 2019 letter of Warren Buffett, after accounting all bonuses, splits for the last many years, the per unit cost of Coca-Cola for Warren Buffett is $3.5. At $3.5 in 2019, he has received $1.64 dividend. Right? What's the dividend yield? The dividend yield is 50%. So that's a huge dividend yield, gives psychological boost. Other things remaining constant. This is very important. Other things remaining constant. It is empirically proved that shares with a track record of increasing their dividends. I repeat, shares with a track record of increasing their dividends often deliver higher returns relative to companies which pay less dividends or no dividends. Right? Investor perceives growing dividend payment as a sign of company strength, stable businesses with positive expectations of future growth, commitment to reward shareholders, and such positive sentiments about the dividend paying company makes the stock more attractive, and high dividend helps company to rise its share price steadily. And this is what the psychological support to the higher rise in the stock prices of these companies. So if you look at in totality, supported by high and growing dividends, it has been observed across markets that high dividend yield companies generates higher capital appreciation as well. And this is what the strategy of dividend HDFC dividend yield fund. There's one question may come to your mind. The question is why at this time? Why we have not brought this strategy? If the strategy is so good, why have not brought this one few years ago? Now everything has its own time, and that should come at the right time. Why it is the right time to go for the dividend yield strategy is the global scenario. We need to understand the global scenario, friends, for a very simple reason. If you look at the floating stock of Indian stocks, the ownership of FI is far higher than the ownership of Indians. I'm keeping the promoters out. And if I bring the promoters in, after promoters, FIIs have the largest holdings in the leading companies of India. And that's why we need to understand the global scenario and global sentiment, because foreigners are buying our stocks on a day-to-day basis more than Indians, right? So to understand the state of Indian markets, you should not talk to only fellow Indian. You should not look at your neighbors, what they are doing. You should look at what Americans are doing. You should look at what Europeans are doing in your markets. Then only you'll be able to get the pulse of your markets, right? And this is the reason that I take you through the global scenario. What's happening globally? Friends, globally, for the last few years, and particularly it's more conspicuous in this current year, the supply of money is far more than the demand for money. When the supply for money is more for the demand for money, you know what has happened? Very simple. Go back to this first slide, the most important slide. Treat money as a commodity. It is supplied and it is demanded. And when it is supplied and demanded, what has happened? When the supply of money is more than demand for the money, the price of money will come down. The price of money is denoted by interest rates, and when interest rates comes down, when the price of money comes down, price of other assets rise. And that's why the assets world over, be it equity, be it bonds, be it gold, as a rise in value, irrespective of the fall in GDP growth. It has no connection with GDP growth rates in the short term. Right? This is one special thing we need to understand. Now look at this is the global indicators. Look at the bond yields, 10-year bond yields in US less than 1%, bond yields in UK less than 0.5%, bond yields in there is no bond yields in Japan. In Germany it is negative, France is negative, Switzerland negative, Denmark negative, Sweden negative, Norway negative. So many rich countries, the bond yields are negative. And look at the inflation, there is no inflation at all. The last curve is the last column, dollar index column is most important column here, but I will talk later when I'll come to why you should invest at these levels. Now, look at this chart and then come to this slide. It's a yield-starved world. Starving, right? कुपोषण हिंदी में जिसको बोलते हैं ना, कुपोषण, खाने को नहीं है, भूखा मरना. तो जब इंसान भूखा मरता है ना, तो कुछ भी खाता है वाला हालत दुनिया में है, right? They don't have yields. Now look at your portfolio. In your portfolio, you have two assets, bonds and equities. In financial portfolios, I'm keeping the real estate and gold out because most of 90% of our funds there are in a physical form, right? So financially speaking, in your financial portfolios, either you have bonds or equities. Why you have bonds? Bonds because it protects the wealth and it generates regular income. And why equity? Because it generates wealth, so create wealth. Look at now in US, in UK, Japan, Germany, entire Europe, bonds are not generating regular. They need regular income. Yes, it is protecting wealth for them, but that too in a very long term, right? You have to hold 10 years and then you get the same money back. It is protecting wealth. You can say because since there is no inflation, it is working on its principles of protecting your wealth, but bonds in US is not generating it. So what has happened? As the fixed income security segment does not offer you regular income, investors who want regular income are turning towards equities. And that has suddenly increased the demand for good growing businesses which pay high dividend yields. Coupled with that, the taxation changes in India last year, that your dividend will be taxable. Dividend will be taxable. It means that there will be no dividend distribution tax. And if there is no dividend distribution tax, most of the high dividend paying companies in India will be able to pay entire dividend, entire amount for income distribution as dividend, 100% dividend outgo, and that 100% dividend outgo will be received by FIIs, and FIIs pay very less dividend tax compared to the regular income. So they will be more happy receiving dividends compared to Indians. For Indians, what's the message is, I'll come later when I'll talk about the tax benefits, but the tax benefits gives them an opportunity where they can receive 100% of the income distribution as dividends, which is taxable at a lower tax rates in US or in Europe. So since this is the chart which will give it to you, very surprising. It's difficult for Indians to understand this, very difficult for Indians to understand this, that in US dividend yield is higher than bond yield. Can you believe it? आपने अपनी उम्र में, अपनी जिंदगी में ऐसा कभी ना देखा होगा, ना कभी आप सोच सकते हैं कि आप निफ्टी में पैसा डालिए, निफ्टी के इंडेक्स में पैसा डालिए और आपको जो डिविडेंड हर साल मिलेगा वो आपके एफडी के रेट से ज्यादा होगा. ये आपके दिमाग में कभी आया ही नहीं होगा. But this is happening in US. In US, your dividend yield is 0.76%. Your bond yields, if you hold bond for 10 years in US, your income is 0.76%, whereas the dividend yield in US is 1.65%. जो मैं आपसे बात कर रहा था, they are looking for the regular income. So if you receive higher regular income, if you hold equities, then you hold bonds, right? This is the reason number one, that why we have brought HDFC dividend yield strategy fund at this point of time. Reason number one. Reason number two, why at this time? Reason number two is due to pandemic, the real economy has turned risk averse, right? But our experiences says that the fiscal policy adopted by Europe and US and Japan and the monetary policy adopted by all these three continents, three countries has turned the investors to risk conscious, right? Now, due to the supply of money, very high supply of money, I'll give an example. What is the supply of money? What is supply of money is whenever the RBI buys bond, what is that? What it does, it comes to the market, buy the bond, assume that the bond costs 100 crores. So a RBI will buy a bond, which is nothing, a piece of paper, and RBI will take the piece of paper from the market and will pay 100 crores. And 100 crores paid by the RBI to buy that bond is the new money supply to the economy. Now, the economy is richer by additional 100 crores. This is what happens when the central bank buys bond. Now, I'll give you a very interesting case to understand what does it mean. 1914, Federal Reserve came into being in 1914 till from 1914 till 2008, almost 90 years, right? The balance sheet of Federal Reserve was $800 billion. By the end of 2010, the balance sheet of next 2 years, the balance sheet of Federal Reserve was $2 trillion. क्या मतलब हुआ? इसका मतलब ये हुआ कि पहले 90 साल में उन्होंने जितने बॉन्ड खरीदे उससे दुगने बॉन्ड अगले 2 साल में खरीदे in GFC, Global Financial Crisis 2008 में, ठीक है? Now in 2020 they have bought the bond worth $4 trillion. क्या मतलब हुआ? जितने बॉन्ड्स उन्होंने पिछले 106 साल में खरीदे उतने बॉन्ड उन्होंने 6 महीने में खरीदे. Can you understand the quantum of money supply? And this has not happened only in US. This has happened in Europe. This has happened in Japan. और इसकी वजह से वहां पर एक मजेदार बात हुई कि लोगों में इन्फ्लेशन नहीं है. ये बहुत ध्यान से समझिएगा मेरी बात. वहां इन्फ्लेशन नहीं है. इन्फ्लेशन तब नहीं होता है जब फ्यूचर को लेके आप बहुत कॉन्फिडेंट नहीं होते हैं. इन्फ्लेशन नहीं होने का मतलब है आप पैसा खर्च नहीं कर रहे हैं, और पैसा खर्च नहीं करने का मतलब है आप पैसा बचा रहे हैं. इसको कौन साबित करता है? इसको साबित करता है वेलोसिटी ऑफ मनी. तो यूएस में जितना ज्यादा पैसा दिया जा रहा है उतना पैसा खर्च कम हो रहा है. बहुत मजेदार बात है, बहुत ध्यान से समझिए. यूएस में जितना ज्यादा पैसा दिया जा रहा है उतना कम पैसा खर्च हो रहा है, और ये जितना पैसा आ रहा है वो सब बचाया जा रहा है. And that's why bond doesn't have yields and they have become yield starved nations, right? और इस वजह से डॉलर कमजोर होने लगा है. And we call it, जब भी पेंडेमिक हुआ था देखिए डॉलर कितना महंगा हो गया था. Can you see in this chart? Right? This is called risk averse, flight to safety. But the same world which flown to safety, which was risk averse, now turning risk tolerant. मैं बहुत मजेदार बात कहता हूँ, बहुत ध्यान से समझिएगा और ध्यान से सुनिएगा. According to the forecast of Citibank, dollar may lose 20% value this year, 2021. Dollar will get weakened by 20% in 2021. If that happens, 2020 में आप वहां बैठे हैं जहां आप 2003 में बैठे थे. मैं वापस बोलता हूं, अगर सिटी बैंक का फोरकास्ट सही साबित होता है 2021 में अगर डॉलर 20% टूट जाता है जैसा कि वो कह रहे हैं, और डॉलर क्यों टूटेगा? क्योंकि डॉलर की इतनी ज्यादा सप्लाई हुई है, राइट? और डॉलर क्यों टूटेगा ये दूसरा कारण मैं आपको आगे बताता हूं. अगर डॉलर 20% 2021 में टूटता है, गिरता है, तो इसका मतलब ये है कि आप हिंदुस्तान में वहां बैठे हैं जहां आप हिंदुस्तान में 2003 में बैठे थे. अब डॉलर क्यों टूटेगा इसका कारण समझिए. द वर्ल्ड इज टर्निंग रिस्क टॉलरेंट. व्हाई द वर्ल्ड इज टर्निंग रिस्क टॉलरेंट? Because soft monetary policy is going to continue. Why soft monetary policy is going to continue? Because there is not reflation is not happening. और जब तक रिफ्लेशन नहीं होता है, जब तक ये मॉनेटरी पॉलिसी वहां बंद नहीं होती है, जब तक वहां पर जीडीपी ग्रोथ रेट लौट के नहीं आती है, तब तक उनके लिए डेस्टिनेशन इंडिया. एंड व्हाई डेस्टिनेशन इंडिया? बिकॉज रूपी हैज बिकम स्टेबल करेंसी. एंड व्हाई रूपी इज स्टेबल करेंसी? ये कारण हम आगे जाके समझते हैं और बहुत इंटरेस्टिंग है, बहुत ध्यान से देखिएगा. मैं आपको एक छोटी सी चीज बताता हूं. उसके पहले एक सवाल आपके मन में आ रहा होगा कि भैया ऐसा इतना पैसा लगातार देना और इंटरेस्ट रेट को कम रखना ऐसा कब तक चलेगा? राइट? ऐसा कब तक चलेगा? जब तक महंगाई नहीं आती. Those who are afraid of these policies, those who believe that this bubble is being created, बबल तब तक नहीं बनता है जब तक महंगाई नहीं आती है, और महंगाई नहीं है. Look at the inflation. As I told you at the outset, you will not be able to understand investments if you don't know inflation. You will not be able to understand interest rates if you don't know inflation. Right? Interest rates and inflation go hand in hand. और यूएस में महंगाई 1% के आसपास है, बाकी जगह तो बिल्कुल भी महंगाई नहीं। अब आखिरी आपको एक प्रमाण देता हूँ, एविडेंस देता हूँ कि ऐसा कब तक चलेगा। लुक एट द फेडरल ओपन मार्केट कमिटी मीट ऑफ November 5, 2020. They have clearly said that they have twin objectives. The two objectives are they want to see inflation more than 2% and want to wait for inflation to remain at more than 2% for a considerable period of time, few months. पहली चीज तो ये चाहते हैं कि इन्फ्लेशन 2% हो और लंबे समय तक 2% से ऊपर रहे, तभी वो पॉलिसी चेंज करेंगे। उन्होंने साफ साफ ये कहा है। और दूसरी बात ये कही है, दे वांट मैक्सिमम एम्प्लॉयमेंट। जब तक मैक्सिमम एम्प्लॉयमेंट लौट के नहीं आता है, जब तक 2% के ऊपर महंगाई लौट के नहीं आती है, they have clearly said will increase its holding of treasury securities। ध्यान से पढ़िए, will increase its holding of treasury securities। इसका मतलब ये है कि वो बॉन्ड्स खरीदते रहेंगे, मॉर्गेज बैक्ड सिक्योरिटीज खरीदते रहेंगे, इसी रफ्तार से खरीदते रहेंगे जिस रफ्तार से अभी खरीद रहे हैं। कैन यू अंडरस्टैंड दैट? तो ऐसा कब तक चलेगा? इफ यू वांट टू अंडरस्टैंड हाउ लॉन्ग दिस विल कंटिन्यू, कीप ए आई ऑन inflation, right? And this is the reason, friends, FIIs, those who have withdrawn 70,000 crores in the month of March and April, they have given you 1.2 lakh crores in last 6 months. This is something very interesting. I'm following this for last 28 years because my career in this industry is 27 years. और मैं जब से आया हूं तब से FII की बात कर रहा हूं। मजेदार बात है, बहुत से इंडियंस बोलते हैं चले गए तो क्या होगा, 27 साल में आए हैं, गए नहीं है, और जब जाते हैं तो ज्यादा पैसा लेके आते हैं। इस साल 70,000 करोड़ रुपया निकाल के लेके गए, 1.25 लाख करोड़ रुपया दे दिया। And never in my life I have seen that month of November in a single month they have given 50,000 crores. अब इंडियंस देखिए हमारे मार्केट में क्या कर रहे हैं। The blue represent Indians and the red represent FIIs। हम लगातार बेच रहे हैं, वो लगातार खरीद रहे हैं। Why it's happening? Because they are hunting for yield। अब एक आखिरी बात करता हूं, 10 more minutes I'll take before I come to the specifics of dividend yield strategy। Why it is good for India? Why it is good for India? Please understand. Please understand. And everything you will be able to understand if you look at history. Look at the history. Look at my cursor. It's 2003. And look at the fall in dollar index. This is dollar index. Look at the fall in dollar index. And look at the rise in foreign exchange reserves. Right? This is 2020. Come the last. Look at the fall in dollar. And look at the rise in India's foreign exchange. This is the only thing, friends, we want. Fall in dollar। आज सिटी बैंक की दोबारा बात याद दिलाता हूं, अगले साल लोग ये मान रहे हैं कि डॉलर 20% कमजोर होगा। 20% कमजोर होने का मतलब है यू आर गोइंग बैक टू 2003। Why it is good for India? Because whenever dollar becomes weak, capital flows start rising to India. Whenever dollar becomes weak, technology travels to India. Whenever dollar becomes weak when America becomes weak. When America becomes weak, the demand comes down. When the demand comes down, the oil prices comes down. और इंडिया की एक ही कमजोरी oil prices. So weak America, recession in America, bring the interest rates down, increases the capital flows. The recession in America brings the price of oil down, helps Indian foreign exchange reserves to grow. Whenever the America is in recession, they supply more dollars at low interest rates. That makes American investors to do carry trade, take the dollar away from US, and that makes dollar cheaper. When the dollar is cheaper, gold becomes expensive. When the gold becomes expensive, Indians don't buy gold. And when Indians don't buy gold, it helps India to grow. तो जब भी इतिहास में चले जाइए, इंडिया ने जो बेस्ट जीडीपी ग्रोथ रेट है, इंडिया ने जो बेस्ट मार्केट ग्रोथ है, वो कब दिया है? 1982-83 जब डॉलर वीक हुआ था, राइट? 2003 to 2005 जब डॉलर वीक हुआ था, and 2009 and 10 अगेन जब डॉलर वीक हुआ था, and 2020 जब अगेन डॉलर वीक हो रहा है। I am such a person who prays that American recession always brings prosperity to my country, be it GDP growth rate and be it markets. Facts and myths, right? Continuing. अब देखिए कि बहुत मजेदार बात बोल रहा हूं आपको, जब भी डिविडेंड यील्ड की बात आती है तो इंडियंस क्या करते हैं आप जानते हैं? गूगल जाते हैं, गूगल करते हैं शो मी द हाईएस्ट डिविडेंड पेइंग कंपनी। द कैच वर्ड इज हाईएस्ट एंड हाई। The catchword is highest dividend today and the growing dividend. Growing dividend high yield दोनों अलग हैं, ध्यान से देखिएगा. NSE has prepared an index called Dividend Opportunities 50 Index. Right now, this Dividend Opportunities 50 Index is different from Nifty Index. मजेदार बात की आप जानते हैं, पिछले 13 साल से 1 अक्टूबर 2007 को इंडेक्स आया था. 1 अक्टूबर 2007 they have created this index. After that, last 13 years, the returns generated by Dividend Opportunities Index is much higher than Nifty 50. I told you, generating alpha, the first slide, Michael Higgins cost, dogs of the Dow theory, right? If you remain with high dividend yield funds, you'll be able to generate high total return. But before first comes out of this misconception, what does it mean by high dividend yield stocks? Many people believe these are high dividend yield stocks. No, they are highest dividend yield stocks. You know why dividend yield is higher? Because these companies are not doing good. Since they are not doing good, these companies are not growing. Since these companies are not growing, their stock prices have fallen. और स्टॉक प्राइस कम होने की वजह से उनका डिविडेंड यील्ड ज्यादा है. ये कंपनियां एनएसई के डिविडेंड अपॉर्चुनिटीज 50 इंडेक्स का हिस्सा नहीं है. Which are high dividend yield companies? These are high dividend yield companies. Tata Consultancy Services, Infosys, Bajaj Auto, Nestle, Hindustan Unilever, Hero MotoCorp, Power Grid. Can you believe it? ITC. These are the companies which forms the part of dividend opportunities, not this yellow table. यही तो इंटरेस्टिंग बात समझ में है. At the first prima facie, जैसे ही आप इन stocks को देखते हैं, what comes to your mind? Are they dividend stocks or are they growth stocks? Each one of you will argue they are growth stocks. No, friends, they are dividend stocks. They are dividend paying stocks, regular dividend paying stocks. They are the stocks where the dividend keeps on rising year on year. These are the growth companies. What is dividend yield strategy? Dividend yield strategy is exploiting for is a journey towards growth. Finding the growth, but how to find the growth? Through dividend yield, high dividend yield. High dividend yield not only helps you to identify the companies which increases their ROEs, they helps you what is the right time to buy those businesses. जब भी कोई कंपनी डिविडेंड देती है, अपने ROE को प्रोटेक्ट करती है और अपने ROE को बढ़ाती है. फिर से उस पहली स्लाइड पे जाइए. बेस्ट कंपनी कौन सी होती है? जिसका कॉस्ट ऑफ कैपिटल कम होता है, जिसका ROE ज्यादा होता है, जिसका ROE बढ़ता रहता है और जिसको कैपिटल इन्फ्यूजन की बार-बार जरूरत नहीं पड़ती है. और जिस कंपनी को कैपिटल इन्फ्यूजन की जरूरत नहीं है, पता कैसे करते हैं? ये वो कंपनी होती है जो डिविडेंड देती रहती है. This is something we need to understand if you want to understand the dividend yield strategy. Now look at the performance of Dividend Opportunities 50 for last 13 years from the day of inception, that is 1st October 2007. If you have invested regularly, blue curve is of dividend opportunities and red curve is Nifty 50, right? अब आप देखिए, if you have invested 1 lakh of rupees on 1st October 2007, the day this index was created, right? उस index में अगर आपने 1 लाख रुपया डाला होता, your value today is 2.68 lakhs in Nifty 50 total return index, whereas in Nifty dividend opportunities, your is 3.36 lakhs. How much more you have generated by investing in high dividend yield stocks? मजेदार बात ये नहीं है. मजेदार बात ये देखिए. If you have invested lakh of rupees in Nifty TRL, your total value as of 31st October is 2.68 lakhs. Out of 2.68 lakhs, 38,000 is the contribution of dividend and 1.29 lakhs is through the growth in stock value, that is appreciation. Whereas in dividend opportunities, you have made 3.36 lakhs higher. But look at the contribution of dividend. It is 94,000. And look at that capital appreciation. It is 1,41,000. आपका appreciation ज्यादा है, dividend भी ज्यादा है. तो ये क्या बात साबित करता है कि अगर कंपनी लगातार dividend देती है, तो वो कंपनी के शेयर प्राइस को भी बढ़ाता है. Take the case of Coca-Cola and the case of Warren Buffett. Warren Buffett bought stock at $3.5. Today the price of the dollar is $51 per Coca-Cola share. और उसके ऊपर $1.64 2019 में उसको डिविडेंड मिला है, which is 50% of the capital invested, and this is called dividend yield. यही एक बात है जो हमें समझनी है. That dividends helps appreciation, helps total return to rise, right? ये देखिए आप ध्यान से, मैंने आपको रोलिंग रिटर्न देता हूं. ये पॉइंट टू पॉइंट रिटर्न है. This is point to point return. Many people you will say that no, point to point we don't believe it. And look at the rolling returns. rolling returns of Nifty 50 and dividend opportunities 50. The blue curve represent Nifty total return and red curve represent dividend opportunities return. For 10 years, daily rolling for 10 years. मतलब आपने रोज इन्वेस्ट किया है और जो रोज इन्वेस्ट किया है 10 साल तक अपने 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 पैसे को रोक के रखा है. Look at the performance of red curve versus blue curve and look at the contribution of dividend. Why dividend opportunities total return index has performed better? Because dividend contribution is high. Dividend contribution बहुत ही जरूरी है. Dividends don't lie, friends. Dividend helps ROEs to grow. ये बात है जो हमें समझना है. I'll give an example with the help of 3 shares which forms the part of dividend opportunities fund. Assume Nestle. By no stretch of thinking anybody will say that Nestle is a high dividend paying company. It's a growth company, right? Your 1,500 stock has become 15,000 stocks in last 10 years. But look at, अगर आपने नेस्ले में 1 लाख रुपया डाला होता 31 अक्टूबर 2008 को, तो उस साल आपको 1,800 रुपए का डिविडेंड मिलता. कितना? 1,800 रुपए का डिविडेंड. पिछले साल 2019 में इसने 22,000 रुपए का डिविडेंड दिया. इसका मतलब आपका डिविडेंड यील्ड कितना हो गया? 22%. लुक एट द ग्रोथ इन डिविडेंड यील्ड. आप कहेंगे 2020 में तो डिविडेंड यील्ड कम हो गया. कम नहीं हुआ है, वो दिसंबर में डिविडेंड देता है. वन इंटरिम डिविडेंड कम्स इन दिसंबर. अगर मैं दिसंबर में आपसे मीटिंग करता तो ये आखिरी कॉलम भी ऊपर होता था. Look at the performance of Nestle dividends, right? Look at the performance of TCS dividend. अगर आपने TCS में 1 लाख रुपया 12 साल पहले डाला होता तो आपको उस 1 लाख रुपए के ऊपर उस साल 2,800 रुपए का डिविडेंड मिला था और लास्ट ईयर आपको उस 1 लाख रुपए पे 15,000 का डिविडेंड 14,500 रुपए का डिविडेंड मिला. इस साल कम मिला क्योंकि TCS ने ये माना कि डिविडेंड टैक्सेबल हो गया है तो बाईबैक करना चाहिए. 16,000 करोड़ का बाईबैक कर रहे हैं. अगर वो बाईबैक नहीं करते तो उसका डिविडेंड देते और आपको इस साल करीब 18,000 रुपए का डिविडेंड 1 लाख रुपए पे मिल जाता. That gives you a dividend yield of 18%. Look at the power grid. Power grid का इश्यू आया था 2007 में at 52 rupees. 52 rupees पे आपको 1,200 रुपए का डिविडेंड मिला था. That gives you a 2.4% dividend yield. तो अगर आपने 1 लाख रुपया डिविडेंड के लिए डाला होता, ग्रोथ के लिए डाला होता in 2008 इन पावर ग्रिड, तो आपको उस साल मिला था 1,200 रुपीज एज ए डिविडेंड और पिछले साल आपको मिला है 11,000 रुपए डिविडेंड. Look at the dividend yield, which was 1.2% has become 11%. Why it has happened? Because it is consistently growing dividends. TCS has consistently growing dividends. Nestle has consistently growing dividends, and that's why they form the part of dividend opportunities. Why you should be in dividend opportunities fund? Because in dividend strategy, HDFC dividend yield strategy fund, the benchmark is dividend opportunities fund, and dividend opportunities fund ने Nifty 50 को हराया. तो आप देखिए आपका कितना अल्फा जनरेट हो सकता है, क्योंकि in this fund the fund manager intends to beat dividend opportunities fund which has beaten Nifty 50, not the Nifty 50. So chances are that dividend yield fund will generate higher returns for you, and this is what, friends, we need to understand. Growing dividends. एक और मजेदार बात बताता हूँ. 90% of equity investors are short-term investors, but the investors, those who hold dividend yielding stocks, have shown longer periods of holding, क्योंकि हर साल रेगुलर इनकम मिलने की वजह से उनकी जो शॉर्ट टर्म फ्लक्चुएशन से परेशानी होती है वो कम हो जाती है. तो हाई डिविडेंड यील्ड कंपनीज not only generates high total return for you, they help you overcome behavioral limitations. Long term is nothing but the sum total of short term, and dividends protect your short term. And this is the biggest behavioral reason that why one should invest in dividend opportunities. Dividend HDFC dividend yield strategy. Dividend yield strategy fund has dividend opportunities as a benchmark और उसमें financials बहुत कम है. So if you invest in this fund, you will be able to diversify your portfolio compared to funds which is chasing Nifty 50. Friends, thank you for your time. आपने मुझे समय दिया, इसके लिए बहुत बहुत शुक्रिया. Thank you HDFC Securities. Once again, I submit my disclosure. Many of the views expressed are the speaker's view, not necessarily of the HDFC EMC. Right? Mutual funds investments are subject to market risk. Read scheme-related documents carefully before investing. Thank you, Raju. Thank you very much. Available for questions if any. Hello? Hello? Siju, are you there? Hello? Hello?
Hello, Saju.
Hello? Asha, from my side, I think I've concluded my presentation. Any questions I can take? Otherwise, we can.
Thank you so much, sir. It was really an elaborate, details that you have shared with us in the last 40-45 minutes. So we have one interesting question. So I think uh, this participant would like to know, why you have bought this dividend yield fund at the end of the year. Why you didn't launch it at an early stage.
Then, as I told you, why 2020 motivated us to bring this fund. And once you perceive that you want to bring this fund, it takes some time to get it approved. The clearance from regulators as well. It's a bit lengthy process. It doesn't immediately happen, so it takes some time, right? But the biggest reason for this strategy is, as I told you, there is no yields in the world, first world particularly, and investors, most of the, rather all the investors in the first world are looking for yield, and when they come for the yield, they look for not only appreciation, also for the regular income, and these high dividend yield companies offer them regular income. That's why we strongly believe going forward, इनमें जो capital appreciation है वो भी दूसरों से ज्यादा होगा, and that prompted us to bring this fund in this year. Number one. Number two, डॉलर के कमजोर होने की फोरकास्टिंग जो होने लगी है वो 2 महीने से तो होने लगी है सर.
Right,
Right?
sir.
So that the world was
Right.
into a risk stage, not in the risk tolerance stage.
Absolutely right. So we had only one question that I wanted to ask you, which was asked by one of the participants. So we can conclude this webinar over here. Thank you so much, sir, for taking out the precious time and sharing all these details on an PPT. It really helps the investors to make an informed decision on making the investments. Right? Thank you so much once again, sir. So.
Thank you, Haji. Thank you, HDFC Securities, for this opportunity. Thank you very much. Jai Hind.
Thank you, sir.